everyone to today's Dealership Leaders webinar on how these three dealerships are preparing for a slower ag market. My name is Andy Campbell. I'm an industry analyst here at TractorZoom, and I'll just be moderating the discussion today. So I'm excited to announce that this is the first partnership webinar we've ever held. So thank you to Anvil AppWorks for working with us on this one. And also, it's our largest webinar we've ever held before. So thank you to all you attendees, all you registrants for making this happen. And there's obviously a lot of interest in this topic right now. One of the reasons why we've had so many people sign up. But before we begin there, I want to make sure that I thank the team at Anvil for all the great work that they've done, the great team here at TractorZoom for all the work that they put in. For all you registrants, I know it takes a lot of time to carve out the time for this webinar, but it's also important just to invest that time in yourself and your team. Finally, I want to make sure I thank our three guests just in case I forget it towards the end. So Dwayne, Trent, and Brian, thank you ahead of time. And then finally, this is not necessarily a promotional webinar, but if you are interested in Anvil's very intuitive CRM platform or how TractorZoom is helping dealerships value and optimize their inventory, just reach out to me and I can connect you with the best person to help you with your situation. So we'll also be sending out a 3-minute survey right after this webinar. So that might be another avenue if you want to reach out if you have any questions. That's good. Here we go. So just to set the stage for today's webinar, and then we're going to let our guests talk. We've had 2 full years of incredibly high farm profitability, and that's translated into 2 good years of equipment sales. On top of that, I know equipment supplies have been tight, so inventory holding costs probably were not a big topic of discussion at most meetings. And then also, we've got some equipment categories that are returning with their supply, some faster than others. But if you multiply that by the increase in machinery value over the past couple of years, take into consideration the higher interest rates, and then also going into this year, a challenging weather pattern and more than likely a lower farm profitability, we certainly have ourselves a distinctly different operating environment now than what we've been dealing with the last couple of years. So not saying this is bad, not saying this is good. That's for these 3 guys to discuss. But what it does say is we need to think about it and think intelligently on how we move forward. So with that being said, let me go into our introductions. So first to introduce is Brian Knotts, COO and Vice President of Koenig Equipment. Brian has been in the equipment business with John Deere for over 25 years. After a brief start in the automotive industry, Brian has held successively larger marketing, sales, operations, and product director positions with John Deere, with one of the more notable projects of leading the launch of the S-Series Combine into Europe. Before joining Koenig as our CEO in November of 21, Brian held a very functional, comprehensive role as John Deere's division business manager in the Northeastern United States. Next up, we have Dwayne Kautzman. Dwayne is the Vice President of Asset Management at Hudson. So Dwayne has also been in the business for about 25 years. Those years are a combination of dealership leadership roles within Deere & Company. He's also spent most of his career in the sales and inventory management field, but also has held roles in finance and aftermarket. So all these experiences help Dwayne navigate the sometimes turbulent waters of the agricultural equipment industry. And then finally joining us, we have Trent Giles. Trent has been with Koenig Equipment for about 17 years, and he's currently the regional and whole goods program manager. And so not only is he bringing diversity to our panel in terms of brand and part of the country that he represents, but Trent also was the marketing and whole goods program manager for CanEquip during the 2012 to 2015 market downturn. So that experience, while probably not fun to deal with, will prove valuable as we're coming off another marketing high. So again, thanks Brian, Dwayne, and Trent for the time, knowledge, and the whole experience that you're going to be sharing with us today. Okay, and then so finally, that brings us to the content and the topic. Oh, sorry, I forgot to turn there for Trent. So that does bring us to the first topic that we want to talk about, though, within sales. And so as we were coming up with this webinar idea about a couple months ago, we reached out to a lot of our dealer partners, just to ask them, what do you want to hear about? And the topics pretty much consisted of sales, inventory, customers, and then partnerships. And we have specific questions within each one of those, but let's focus first on the sales question. And what I'm going to do is I'm going to ask a specific question to a particular person. And then if the other two have some comment that they want to chime in on, they can. But I'm going to try to keep it moving forward. So we have about 10 to 15 minutes per topic. And then if anybody in the webinar has any questions, you can use your Q&A chat function within the webinar. Feel free to send those in. I'll try to collect them, and then we'll save some time at the end. I'll distill them down, and then we'll answer, or we'll ask the panelists those towards the end. So starting off with sales, and Brian, I'm going to throw the first one your way. How is your dealership using data to better prepare your sales team?
Great. So specifically around the sales team, I think we have to really look at the fact that the last 3 to 5 years, you talked about the change in the times right now. I would say we're going, in my opinion, of the cycles, we're going from abnormal to more normal. Abnormal has been really what we've been experiencing lately, which is extremely high turn sold equipment, used equipment that goes from one farm to the next. And I think that's been pretty universal across the board. Allocation by our suppliers to kind of manage that. So the result of that is really we have some bad habits in our sales department, and we have some, I'd say about, in fact, it's exactly 20% for us of our sales team has been with us 5 years or less, and their bad habits have been their entire career in this abnormal. So how do you take what they think is normal and take them into what really normal is, as well as just the rest of the staff that has kind of gotten used to not having to really, I hate to say hustle, because it's always been hard work, but you really just don't have to sweat as much over some of the inventory because it was turning so well. So, for us, it's really threefold areas. The first is we have a data analyst on staff, and he just does a fantastic job. So the first area is he's assembled using some of the tools out there, Rand Riley's EDA tool, put that together with market share to really establish what have been the purchase histories there. And we know market share is on new, but we're looking to see what the purchase histories are, both new and used, and see who's out there purchasing. And then we compare that to on a territory basis, because as we have our CAMs all both broken down to territories, in their territory, who have we been quoting? And most importantly, who have we not been quoting to? And then also be able to compare that to who have we sold to? So the delta between those two of, hey, who has been buying stuff and who are we quoting and selling to? That's our opportunity. And so we're working very diligently to, at an account by account basis, be able to bring that back to the forefront for our CAMs and make sure that they are, going back to those farms, spending the time, building more relationships, and frankly, that they have been able to even manage the last couple of years as the business has come to them. So that's the first area. The second area is we've been fortunate to have some discipline to where during these good times, we've set aside money that is a used reserve. And that used reserve we're using to, as inventory prices, as we have to adjust those due to market conditions, we're lowering our cost using that reserve at the same time. So we can still have that margin for that CAM, so they can still get that same benefit because they're paid based on gross margin. They can still have the best benefit. Said another way, if the market price goes down and you keep costs, there's less incentive for that CAM to sell because their commission is going to be less. So we're using that reserve to make sure that delta stays the same. The third area that we're focusing on our sales team is, again, using an Anvil tool. We're sharing evaluations with our CAMs daily. So it's a recap. Here's what we evaluated the day before with links for them, so they can see prior to even trading, and they can raise their hand and say, hey, if you get that traded, I have a potential lead for that. And that's been extremely valuable because although we'd like to say that all of our CAMs lead with a quote. They don't lead with a quote. So we're not able to really see the activity until maybe we're later in the sales process. And the way things are now, I think as an enterprise, we all need to see the activity early on, so we can see some of those trends, and that starts at the evaluation of the trade.
Good. Dwayne and Trent, have anything particular to add to that?
I would just say that one of the things, you mentioned that a lot of these young reps aren't really familiar with what average really is, that have come on board in the last 2 to 3 years. We really, as an industry and our dealerships, we need to spend time training those reps to understand the financials and how it affects the dealership, like the way an owner would think about it, so that they can understand how we're making these decisions. There's more financial literacy, and they can understand better what is a good decision and a bad decision on a deal. In prior years, they were just reacting to what was walking through the door mostly. But as we have to become more proactive, they're going to have to understand when to take a deal, when to walk away from a deal, and understand what those holding costs are, and have a better, more global view of the business.
Okay, good. So Trent, then I'll throw this one back at you. Regarding sales, what do you see out there that's trending right now?
Well, we're building inventory. There's no doubt about that. You've already shown that. Specifically in my dealership, where you see things, the kind of the canary in the coal mines, but so to speak, on the combines, specifically the high class combines are building. And then also planters, you could start to see that happen there. That's starting to trickle down into all areas of the cash crop side. High horsepower tractors are beginning to build. Our customers are becoming more price sensitive than they had been over the last 2 or 3 years. So we're working through that. You're going to see more judicious use of those reserve funds, like Brian had mentioned. That'll be something moving forward that will be a major trend across most of our dealerships. And then on the customer side, you'll see, I think, fewer roles, more cautious adoption of new technology and those kinds of things as they become a little bit more reserved in their buying approach. But also, I think you'll see some trends towards more defined life cycle management for inventory, and also more specific data needs and system needs moving forward for the entire dealership.
Okay, good. And then so on that specific topic of challenges, Dwayne, what challenges are you facing? And then how do you anticipate tackling those?
Yeah, I think Brian hit it real well. Is probably one of the biggest challenges is getting our sales team to understand things have changed. Their phone's not ringing as much, and it's not just that easy. They're just trying to keep up with phone calls. Today, we got to go out and actually call on customers again. And that's a change from the last 18 months. And so we've got to get them to understand that it's about activity, right? Tracking that activity, using a CRM like Anvil to get in there and make sure that you can see what's going on, especially from a management standpoint, be able to see what your team is doing. It's all about the odds, if you will. If I go out and call on 10 customers, or if I call on 100, I got a better chance of closing one with 100 than I do with only calling on 10. And so it is a numbers game. A lot of guys will just say, well, it's about relationships and all that. It is. There's no question about that. But it's also about numbers. You have to get out there. You have to see people. You have to get going and actually get out there. Then plus give them opportunities, right? Like Brian mentioned, putting together some lists, some things that they can go out there and call on to help them be successful. That's probably the biggest thing, is making sure that our managers are coaching our customer account managers and making sure that they're out there with them, trying to find any deal they can and close any deal that they can. But I think the biggest challenge is mental, if you will. It's we have to get out there and know that, okay, we got to drive the streets again and pound on doors and ask for the business. Because if you go out and you look at a lot of statistics, 60% of deals closed because the person was there. That was it. It had nothing to do with them or anything else. It was because they were there when the customer wanted to buy. So take advantage of that low-hanging fruit. Be there when they want to buy. We got to know who they are.
Good. So on that topic then of, it's all about the numbers, about the number of inventory. And so Dwayne, I'll throw this back at you. So how is your dealership using data to identify some of the inventory that's either at risk or high potential?
Well, I think probably to start with is we've started using the data. It's not really a start of using the data, we have been. I think consistency is key. You have to be consistent no matter what the buying environment is. You have to be consistent with how long you hang on to things, how you liquidate things, how you lower your prices, do all that good stuff. A lot of the tools that we're using today come from both Anvil and from TractorZoom. One of the big things that we're looking at now is that inventory tool that TractorZoom provides to make sure that we can see what the average listing prices are of our machines and to see where we're at. The great thing about that is you can drag it down to the stock number. If we've got one that's way out of whack, we can sit there and take a look at it and say, okay, what's going on? Is there something unique about this one? Which sometimes it's hard to find, but yeah, it's so we can make our adjustment and get things done and make sure that we're in line. And we do that on a regular basis. But again, it's about consistency. Every couple of weeks, we review all of our inventory, make sure that we're priced properly. We need to get aggressive from that side. We definitely will do that as well. We also get out there and look at TractorZoom's likely to age tool. We've been working with you guys to do that. I think it's a fantastic piece. It basically takes a piece of equipment and says, what are the odds of this thing getting to 180 days or older? And so we can be a little bit ahead of the curve, if you will. Get out there, maybe get a little more aggressive on pricing because maybe it does have some odd options. Maybe it's just not something that sells in our area based on our history, that type of thing. And it draws our attention to those. Since we're looking at so many pieces of equipment, it's hard to remember each odd one that comes in. This one can definitely help us with that and take advantage of it. We use Tractor House's Fleet Advisor as well to use valuations, make sure that we've got the same valuations and try and get the best price and value we can as we trade these things in. And then I also watch other metrics along the way with the data, but probably the biggest things from around the inventory piece is just making sure that we're priced right and we're aggressive with some interest rates and programs.
So then, Brian, I'm going to throw this one to you. I've had a lot of dealers and people in many other industries, all related to ag, are likening our current situation to the 12, 13, 14, and then into 15. So how was all of this that we've been talking about done in the downturn that we saw in 13 and in 14?
Well, I mean, there is no silver bullet that's out there of how to do it differently. Dwayne just did a really great job of summarizing what those key fundamental things are. And, you know, as I look and had experienced that versus today, I see more things that are different with this downturn than similar. And I'd say most importantly is that whether it was due to circumstances or intelligence or lessons learned, most of the manufacturers, Deere being our manufacturer, was a lot more disciplined the last 3 years with their manufacturing volumes than they were in the time leading up to that 12-13. Because what happened back then that is different than now is back then the manufacturing was extremely high. Whatever you could sell, they were manufacturing. And what we did, which is what anybody would do, when people were ready to buy, you sold them something. Well, the tough thing is our used buyers became new buyers. In our second role, used buyers became new buyers. So now we had new, and new. And what happened when the cycle went away and we had this used equipment, we didn't have any buyers. From our insights and talking with other dealers, the used buyers are still out there because of the discipline. So I think that's great news, that this is better. This is, to me, that's why this is coming more to a normal period, because the used buyers are out there. There's still good activity. Using some of the resources out there, you can see that there's still buyers that really had to buy used and they're still interested in used. So overall with us, let's talk about what we're doing here in this inventory area. We have a saying in our dealership that's, the ag business, AG stands for analysis and gut. That's what ag is. And so we like to say that the right decisions are 80% analysis and 20% gut. Well, if you're flipped on that in your gut, that's probably going to cause, if you're 80% gut, you're probably going to overreact and you're probably going to start dumping. That's a mistake. You know, the fundamentals are not there from what we can see. Obviously, we're watching that are out there. This is not, it's not a market to go do a bunch of dumping from our insights because of the reasons I just stated. So what we do here with our analysis is we really take 4 different areas and bring them together. So first, the tools that Dwayne was outlining there appropriately, we bring all of those together so we can see that analysis on our plan for every piece. But then we also look for that piece and we bring in tools. We have an API connection to Anvil and we bring in that quote volume. So are there quotes on that piece? Then we bring in information from on our website. Are people clicking on our website on that piece? And then finally, the last thing is from our third parties that we advertise with, Tractor House being one of them. We take data of what's going on and our people on that site looking at that piece. So when you can take those 4 areas, you know, being your pricing and your supply from Tractor Zoom and their predictability, local quotes, website traffic, both yours and outside, we feel like we get a pretty good opinion on what's going on with that equipment, and that's what we rely on. We'll talk a little bit here about plan and prediction here, that kind of bringing that last piece, but when we're looking at inventory, we feel pretty strongly you bring those 4 pieces in on a per piece basis, you have a pretty good idea of what to do with that individual piece of inventory.
Okay, and so then Trent, in a similar type of question, and since you've been through these times before, like we mentioned earlier, what tools are you guys using that you didn't have in 13 and 14?
Well, we're in a little bit different stage in terms of our development as a dealership than what Brian and Dwayne described. So we're adopting some of these changes now. So we've adopted Anvil and Tractor Zoom, and so we're beginning that process. So Tractor Zoom being more specific, one of the things that we really appreciate about that is we're spending more time and now analyzing our own sales and trying to understand that rather than trying to understand the overall market, what's driving our numbers up or down. So we're spending a lot more time doing that. We've invested heavily in our remarketing team. That's something that was different from the last time. So we have a specialist that's his job is to basically find and/or find buyers for equipment maybe outside of our region with other dealerships, or manage those trades. The other thing that we're doing a lot differently is there's just more, you know, you have Tractor Zoom, you have Fleet, and others. There's more points of triangulation for the data. There's more information at our fingertips. So we're looking at things like web traffic, quoting activity, you know, trying to pinpoint 2 or 3 different data points that would confirm our suspicions on the ground. And there's really no shortcut. Also, you need to have conversations with your people. You know, you can go comb through the data all day long, but at the end of the day, you're going to need to sit down with somebody who's accountable for that piece and try to understand what's happening on the ground. And so there, like you said, there's no silver bullet there. You just have to bring as much information as you can into the equation from as many different sources as you can and make a decision based off of that in totality.
Good. No, anything to add to that before I move on? I've got one last question here within inventory. Good, okay. So Dwayne, then this question's for you. What metrics are you watching now that you were not paying attention to over the last couple of years?
You know, I don't know if there's really any that I wasn't paying attention to. I maybe didn't pay as much attention to it. Let's put it that way. I've always watched them. Again, I'm a big believer in consistent practices. No matter what the situation, you may not have to take any action if you're looking at something in the last 18 months, which we didn't have to do, but now you do with certain things. So some of the things that I watch always are new to used ratios on what we're selling from a new and a used side to keep those in order, right? To make sure that we're not building up on the used side. If our used starts selling more than our new, I got to figure out what's going on there, or should say that's great. If our new is selling more than our used, then I got to figure out what's going on there. Is there a reason for that? Are we going to start to build inventory from a used standpoint, or what's going on? I also look at our net sale amount versus what we listed it for to see if we're priced properly. If we're, you know, in those 90 to 100 range percent of our list price, we're probably doing okay. If for some crazy reason that we're selling all of our units the last 60 days for 80% of what we're listing it for, something's wrong. And we got to get out there and take a look at it. So that's a big one to me, to make sure that we're priced properly. Of course, aged inventory, hopefully most got through a lot of the aged inventory in the last 18 months, but those things will start to build up again. So we got to make sure that we're standing on top of that one as well. And again, consistency. It didn't matter that we were in a super cycle to us. We continued to auction things, liquidate things, do whatever we needed to do if they sat there. Now, we didn't do as many in the last 18 months, but I'm guessing we're going to get back to, as Brian said, the normal cycle and make sure that we get these things out the door. We're looking at excess inventory. Now that sometimes can be a little bit tricky because you're always looking at an old number versus what's going on today. So there has to be that little bit of gut feel in there too, as to what does the industry look like going forward. It's always kind of a look back. Do you have more than you need based on historical sales? You know, what's going on right now is the deal, because the last 18 months were crazy. So now you got to turn around and say, okay, what do we truly need? And so we watch that as well. I keep an eye on my pending trades at all times to make sure I know what's coming, to make sure I know what we have to cycle through. And if we know that we've got a lot of things happening there, we may either do some things, get more aggressive from a wholesale standpoint, or get out there and make some other things happen along the way. So there's a lot of different types of metrics to look at. I don't think you ever shut any off because of the change in the environment. I think you just don't have any action because there isn't any action to take at that point. So.
Good. So Trent, Brian, any other metrics to add to that before we move on to customers?
Oh, in fact, I actually wrote down a couple. So thanks, Dwayne.
Good.
That was good.
Okay, so let's talk a little bit about customers. So Brian, this first one is for you. How is your dealership using data to plan and predict equipment sales for specific customers?
So, you know, as I mentioned, our 80% on analysis. So the big thing that and I'll answer specifically the data itself, but the big thing that we've added is what I would call the fourth leg of the stool that frankly, we just haven't needed or haven't formalized as much. And the fourth leg, I'll tell you the first three. The first three legs that we have is that, you know, traditional, used sales manager has always been there with his team to evaluate. The second has been the data analyst, which I've added, which I shared that, you know, we've really put in place here in the last year and a half. And that makes a big difference for us to be able to bring in all this data with a centralized person. The third has been, not only our manufacturer and the information we get from them as Deere, but then also our other partners, not a commercial, but, you know, we leverage, and that's why we're a relationship with you at Tractor Zoom. You know, we leverage the information that you have there and we challenge you as well. And then, partnership with Anvil as well and other areas that anywhere we can get information, Machine Finder Pro, et cetera. So leveraging that's always been the third. The fourth one really is where we're getting at here in the plan and predict. And that's been a recent add. And that's someone who's in Dwayne's role with similar type experience, but really have a 25% responsibility of forecasting and really looking at the fundamentals, because what I see is that's just a different skill set. You know, your used equipment managers really understand what's going on now and does the good job calling based on the information they have. But it's only based on the information they have. That analyst brings more information to them of what's going on and the insights and help us make the good decisions, provide everybody good information. But that this third person really is looking at the demand side of things. So it's a continuous improvement type role tied together with inventory manager that is looking at the economics of things, you know, the good old supply and demand, but more so on the demand side, looking at everything that drives ag demand. So it's anything from weather, commodity prices, and not weather just in our areas, but in all areas that are related, because obviously if an area like the plains had some drought last year, that affected some things. So look at not only weather in our area, but others. Look at the commodity prices, look at the demands, look at economic predictions, et cetera. So all of those inputs that say, okay, what will demand be? And I think that's just a big missing piece that we put in place here. It's still very early on. I can't tell you how that we're going to do with it, but I do feel a whole lot better knowing that where I have the tactical groups focusing on the tactics and what we have today, I now have someone that's doing what we've really needed, which is looking at least a year ahead. Because let's face it, we're making calls right now on planters, planters and sprayers that won't be in until next cycle. There's going to be a lot that happens. And of course, obviously combines there, that's always the tough thing. But personally, we've never had anybody looking that, far ahead and said, what will demand be and what are those trends until now that we have him in place.
Interesting. So then, Trent, how are you guys using tools and data to predict who might be a more likely purchaser of certain products?
Well, we're going back to the basics here. We're doing some of the things that Brian described in a less formal manner, but we're just spending more time utilizing the data that we've had and maybe not used fully. So EDA data, for example, purchase history, our own internal purchase history information that's provided by our manufacturers, and going back to the basics of helping refine that data for our sales reps, looking at systems moving forward that can integrate all that data into a central place at their fingertips so they can make smart decisions in real time, and just spending more time visiting with our sales reps about prospecting, looking for the holes in their territories and those kinds of things. So we're like we said, where there's really no shortcut for hard work. And so what we're really just trying to do is push the tools that we've had all along, but maybe not used fully, and integrate those tools. And centrally, one of the reasons why we're integrating Anvil and Tractor Zoom is to bring all of that data under one roof or one application, so that we can have more intelligent conversations with our sales reps more often and get them out and about doing the things that they really haven't had to do over the last couple of years.
Okay, good. I've got a specific question on the data piece, but I'll wait towards the end. I know we've got a couple other ones that are coming in here. But let's, Dwayne, I guess, do you have anything to add to that before we move on and talk partners?
Yeah, no, I think those guys covered it pretty well.
Okay. So then on that partnership topic, you talked about a lot of the partners and the data that you're working with and the works in progress right now. But for partnerships, and Dwayne, I'll start with you, and this might be different maybe for all three of you. So Trent and Brian, we'll get to you guys next. What are one or two of the top challenges that your dealership is up against? And then how are you working with partners to overcome those challenges?
Yeah, I think probably some of the big things is finding proactive data, right? You can find a lot of reactive data out there, things that have already happened historically, all that. It's trying to figure out what's going to happen going forward. As Brian talked about, is maybe having that vision to see 6, 8, 10, 12, even up to 24 months in advance as to what's going to happen and be able to react to that quicker. It's just been historic that we just don't react very quick as an industry. We just don't. And so part of that has been that we aren't looking at the data. And part of it is just, it's hard to find data that can help you do that. So some of the things that we've done, I guess, is one is, of course, tracking our own stuff. But, we partnered with Tractor Zoom and Anvil to try and bring some data to help us see trends that are going on a little bit sooner than we used to. And be able to react to those faster. I'm out there always looking for new places to find data and probably some different places. Purdue does a great job here in Indiana. They have their ag economic barometer that they put out every month. And believe it or not, some folks will kind of, I don't know what you want to call it, discount it a little bit, maybe is the best way to say it. But things are as simple as if customers feel good about their future, they're going to spend money. If they don't, they won't. And so you got to figure out, how are they feeling? What are they thinking about the future? What does it look like? And I think that Ag Barometer gives you a feel for that, right? They sample 400 customers across the US. And so you don't just get so minded on your own area and that's it, because those trends come through. Doesn't matter where you're at, eventually it hits you. And so you want to make sure that you're looking at those things. Other places like the Federal Reserve. I look at the Federal Reserve website quite often, look at how ag loans are going. Are they taking more loans? Are they paying more loans off? Are they using a bunch of their cash? Lately, they've been paying a lot of loans off. So they're using cash like crazy to pay off those high interest rate loans. So what does that mean? Well, they don't have money to buy equipment if they're using it to pay off their loans. So you've got to kind of bring all those things together. The Federal Reserve of Kansas City probably does the best out of all of them with reporting some of that stuff and showing the history and what's going on from an agricultural standpoint. But I also look at Chicago and St. Louis, since they're closer to us, and you can pick up some regional stuff out of there as well. So I'm always out there looking for what are customers feeling and what are they doing from a different aspect of their business, to see if that can relate back to what we're doing each and every day. So always looking for new partners and trying to find it. It's not easy, but it's out there if you look for it.
Okay, good. Yeah, I always, near the front of the month, I always try to pull up Purdue's barometer and just see what those people had to say. Trent, how about you?
Well, one of the things that we're doing differently and I mentioned it previously, is partnering with dealers throughout North America to try to have a kind of a network of trusted advisors throughout North America that you can bounce ideas off of. So that's something a little bit differently that we've done here recently that's been very successful for us, and have the ability to move inventory around North America based on regional need. Other things that we're doing, like I already mentioned, is partnering with other systems providers that would allow us to find the data and present the data to our teams on the ground in a meaningful way, create more transparency for our teams so they understand the decision-making process at a high level, and are able to duplicate that in their own day-to-day interactions with customers, with their own sales managers. So basically trying to trickle down that culture that we're trying to develop as we move forward, so to be more data driven. So things like Anvil and TractorZoom and others that we're working with to try to bring all that into one place, so that we can have a meaningful conversation where everyone's on the same page moving forward.
Okay, good. And then Brian, same question to you.
So two things come to mind there. The first one is, you mentioned the Purdue barometer. So I always find that interesting because it's like it becomes right. I think there's enough people that watch it, whether they feel that way or not. The minute that it's published, that's how they feel, and that's how they react. Frankly. So it's almost like, listening to some of the afternoon crop reports, it's like, let's have a little something. So I'm always kind of hope like, all right, is Jim going to be optimistic this month or not? Come on, just give me a little something, because it does seem to drive some trends there on a very short-term basis there. And some of it can just be a reaction to commodity prices that have gone through. So, but, specifically, I guess I would say the challenge, and it's just kind of the elephant, guys. So I'll just say it, the elephant in the room is we can have all the best data, we can have the best processes, we can be executing, but we overlap each other. And, if you're neighboring dealers who you're trying to compete with market share on, if they're not on the same page as you, and they're doing something and they're overvaluing equipment, you have to overvalue equipment. And that's really a bad thing, because maybe they're not catching on to some of those trends. And you know what? I mean, no one wants to go to jail for collusion, so we can't pass that. But the reality of it is that is a challenge, because we don't have good data in our industry. It's not a high volume data. I have a lot of experience with the automotive industry as well, separate from just working in it for a short period of time. And they have so much data because there's so many vehicles, a vehicle can move, et cetera, and they have so many numbers. We don't have the numbers, so I think it's sessions like this, it's dealers becoming more economically and data mature. if you would, to be looking at the data and not be overreacting and put realistic values in some of this equipment is to me is probably the biggest challenge of all, because we can be looking at things very, very differently. But when we're working in that shared county with that customer, I mean, you know, you can be easily 20-30% difference of opinion. What are you going to do? You know, it's one of those things, you got to take the deal or not. And you know what our manufacturers are after. It's all about market share. So that means you gotta get that new, you got to put too much in that used, and then you got to figure out the pill. So that doesn't get us anywhere. I get it, but I just had to still state the elephant in the room that that's always a factor, is your neighboring dealers really control what the heck you do. So
Okay.
I said it, I'm the guy.
Here, let me, I mean, actually, let's not even share the screen anymore, because really, I've got a couple of questions written down that had come in. And again, if there's any participants out there that have additional questions, pour those in. But what I was asking before, you know, Windstream cut me off here, is I do have a question to follow from what Brian said about becoming more data mature and just upping your data game, because that's new. I mean, a lot of us, none of us went to school in this environment ready to become, you know, masters of data. So I would like to ask the three of you, how do you become more data mature? How do you up that game that you have? But I'll give you a second to think about that. The first question that came in from Timothy is, how do you guys hold your CAMs accountable for their trade-ins?
I guess from our side, we actually have a washout program where they are incented to get rid of them faster. The faster they get rid of them, the more commission they receive. Our CAMs are full commission. So that's the way that we keep them held accountable to that piece. There's also some detriment if we end up losing a bunch of money on it in the end as well. So there's some positives and some negatives. And so it makes the guys pay attention to their trades, making sure they keep track of them and making sure that their teammates will help them move them as well.
Good. Trent or Brian, anything to add to that?
So that is where Dwayne and Hudson's are. That's where we're going here quickly. We weren't at that spot yet, but I will share part of the reason that we're not, and I do know it's similar with them, is that our CAMs are not calling the used. So we have a third party. Our used department calls the used, and so that way it's independent, and it's really different philosophies. So, you know, I've worked with hundreds of dealers, and there's different philosophies that, you know, tying it to them or not. And the reality is there's pros and cons of both. We choose not to tie our guys directly to the units to where they call it and go through. And really for the simple reason is what we talked about here earlier, it's scope of information. We believe that, you know, if a CAM is calling their use, yes, they're tied to it, but their area of decision-making or their population is only about the size of their territory. And maybe it's about 40, 50 customers and what they do on their own, where, you know, we believe that we're better off using a larger database, if you would, of information, which is, you know, it's all of our CAMs, you know, so we put all that information out there. It's third party, it's using all of these areas. So we call it better. And then when we call it better, it is better for all 25 of our CAMs to go and be tied to that equipment versus just theirs. You know, we want them to have the equal opportunities with all of that equipment. We want them to see it early, and you know, we're taking more formal efforts to really give visibility early. So, you know, maybe one CAM's trading it, and the other, you know, 20 some odd CAMs have just as much motivation to get it sold as that one. You know, so it's kind of a strength in numbers. If there's too much motivation on the guy that traded it, or a demotivation, it's not as much for the 24. I just don't believe that works out as well. The flip side of it is when we call it wrong, we call it wrong, you know, and we don't have that stick. You know, we're all about carrots and not as much stick. You know, as Dwayne outlined there, that hey, if it was a bad trade, it kind of comes back and hurts them on the negative side. We don't have that. And frankly, in the last couple of years, maybe it hasn't been as important, but it is going to be more important, which is why I wrote that down.
We run a kind of a hybrid model between what was just described. So there's a financial incentive to work as a team for that trading salesperson on used equipment. That being said, there's also the stick is behind the scenes, and it's more at the store level. How that is brought into that dealership and improved in that hierarchy. So that's how we're managing that currently within our dealership. And then, I mean, let's be honest, if we find some repeat offenders within our network, you know, we approach their trades different as a team. So there's multiple ways, I guess, to go get that same goal.
So the question though, before we get to the becoming more data mature, is a lot of the advice, especially the very data centric advice, is maybe too much to handle if you only have 1 to 3 stores, and maybe it's not. But a lot of the, you know, if you have 1 to 3 stores and you're asked to do a lot, you know, can you distill down what we've talked about into, okay, you have to do these 1 to 2 things and try to do them very well.
Yeah, I guess from my seat in the ballpark, even if you are a smaller organization, if you have the right tools to help you bring the data to something that's manageable and usable, today the data is there in the business system. It's just you got to put it into a form that you can read and see. And so if you have a tool like Anvil that will bring that together, that's something you can read and see and set those reports up so they just automatically generate. It takes seconds to take a look at what are you doing from a new to a used ratio. Are you 50-50? Are you 60-40? Are you, what are you as you're doing this stuff? So I think there just has to be an initiative to say, okay, we need the tool no matter what our size is. It doesn't matter. The data is there. We just got to be able to use it in a usable form and something we can make decisions on. So I guess from that aspect, I don't really think it matters how big you are.
I could see where the question comes from, because, you know, it seems like we do with larger organizations, and, you know, Dwayne's part of the largest one of this panel. Seems like you know, oh, I can have this person that does this and this person that does that. And I get that their appearance is there, but the reality of it is, as I mentioned, even the person we have that's working on more of the forecasting, it's only a portion of their responsibility. It's not part of their quote day job. It is a carved out area. So I think that's where, you know, take some lessons learned from our manufacturer Deere. You know, Deere has some saying about working in the business and on the business. And there's different people, you can call them revenue, non-revenue, but it truly in the business and on the business is where it's about. And it's for us as leaders to make sure that the right people who need to be working on the business, who like to work in the business, you know, more tactical, et cetera, that you have to kind of force them to carve out that time and work on that business because it's worth it. You know, said another way, that 1% of that person's time can make, you know, 20, 30 other people's lives a whole lot easier and a whole lot better and save risk. And that's what you have to do, you know, as you build. Before you can have full-time equivalent people, you have to take portions of what they're doing, and you have to make sure that they have enough time and that they do take the time to work on the business. So easier said than done. But when you talk in the economies of scale, I mean, that it's what you have to do. So it's, you know, it's a requirement.
Good. Trent, anything to add to that?
I would just say it sounds like maybe on some of these smaller dealerships, one thing you're just going to have to do is realize maybe needs to be a culture shift within your organization, and your leaders need to be championing the cause of using more and better data to make smarter decisions. Start small and be consistent. You know, like Dwayne had mentioned, pick 3 or 4 metrics that are meaningful for your dealership group and hammer those home over the course of a year or 2 years until that becomes part of the culture of your dealership, and then expand from there. But you know, investing in systems is going to be key moving forward. And if you don't do it, your neighbor will eventually. And so you're gonna have to get there one way or another. So just realize that that's part of the game moving forward. And if you don't have the right people in place in terms of a leadership positions that are open to that change, then you need to go out and find them.
Good. And I know Brian can attest to having those metrics, less than 5 that you can read on one hand, that
There you go.
make a big difference.
Yeah.
So, good, okay, we've had a couple new questions come in, and I can take part of the first one, because Kimberly was asking what dealer business systems are you currently on? And does TractorZoom and Anvil integrate? I can say on the second part, yes, they do integrate. But the business systems is a good question. And so, Brian, how about you take that right away? Just a handful of business systems that you rely on.
Well, I think the main business system for us is IntelliDealer or CDK is who we are. So I think that's probably what she's referring to.
Yep.
I guess for us, it's Equip, Deere system.
We're in the middle of a business system changeover. So we're adopting Primus. And then that's going online with Anvil and TractorZoom at the same time.
Wow.
Yep.
Wow. Good luck.
Thank you.
Quite a challenge.
Mhm.
My goodness.
And then I had another question, and maybe you guys can interpret this one or help me interpret this one. So Dustin was asking, looking for new finance partners. So I imagine he may be looking for new finance partners. I know.
Yeah, I guess it depends on what you're talking. If you're talking retail finance or if you're talking wholesale finance, I mean, there's two different sides to this, right? I'm assuming it's probably retail from that aspect, because most of the manufacturers provide a lot of the wholesale stuff. You can also get some outside things, but I don't know if we really have any unique ones from our side. That we've got the farm credits, if you will, that kind of stuff, and Deere, of course, is our main one. John Deere Financial. We have some local folks. Diversified Financial is another one that sends us a lot of information. Believe it or not, Bell Bank, if you haven't heard of those guys, they're in our area. They're actually from Fargo, North Dakota, is where their home office is. And they've been spreading out across this way and have actually contacted us, but we use them very, very lightly. We still go after John Deere Financial as our first provider.
So you're not the only thing from North Dakota in your area then.
No, no.
You're spreading, moving south, migration.
Scary, isn't it?
Yeah.
Good. Well, we've had one new one come in. Do you think demand for precision ag solutions is going to be resilient through a broader ag market downturn?
I strongly believe it is. I really do. I mean, if you look at and that's why I'm quick to answer that question. I mean, if you look at the cycles of how that's come in, precision ag, and it started before I joined the business here in '97, but that, it was in its early stages, and always it's like, oh, we can't afford this, we can't afford this, we can't afford this. With adoption, it goes from we can't afford it to we can't afford to live without it.
Mhm.
And the reality is that, and it's not a sales spiel, but that investment has some of the best return on investment for customers because of the decisions that it makes. And, we've invested very heavily, as well as other organizations, in a different group of individuals separate from our CAMs to spread that message and support that message, because it is a different mentality. But what we've seen very clearly is that for the customers who adopt it and the ones that we support to adopt it, and it requires a lot of support on our side, their return is clear and their decision-making is clear. And those are the ones who are doing the best through the ups and the downturns, because they're making good decisions with agronomic decisions as a result of this. They're more efficient with their documentation of things from the government practice. They're better partners with their lenders and insurance and everything. And in all of those cases, that's made them a stronger business. And even though the expense is there up front, I think there's enough economies of scale and that there's enough actually used equipment. We were having a meeting about that yesterday, about used precision equipment, as Deere finally is, well, knock on wood, that they are starting to supply better, that we feel like we can build that next second and third market of used precision equipment to help that next layer of customers. And we feel that there's some pretty strong demand out there.
Yeah, I'm with Brian. There's no question about it. It's going to stay resilient. The perpetual income is a super important thing. Why do you think all the streaming services ask you for $10 a month to use their system? It's consistent income. And technology is never going to change. If we can save them money, make them money, or save them time, those are the three things that people look at in a business. And if it answers one of those three things, and this is the cheapest way to do any of those three things, they're going to continue to buy it no matter what the economic conditions.
Yeah, well said.
And I would just say as the operations continue to consolidate and there's going to be a generational shift to a younger generation on the farm. These things are standard practices for those folks. And there's really no deviation from that moving forward. It's here to stay.
The one last question before we hop off here, maybe more. Are there any dealer groups or partnering services that build a data pool that can accurately value the performance upgrades on older used equipment that you guys know?
Wow, nothing that I've seen yet. That's probably been one of the bigger challenges as we put these things on, to be able to say, okay, what truly is it? I mean, it has a 2012 frame, but it has 2024 technology hanging on it. And how do you value that? It's a real difficult one, because there isn't a lot of those in the marketplace that have traded yet. And we've had a few and been successful with them so far. But I think something's going to have to work out there as to how do you advertise that? Is it a 2012 with a 2024 kit? Is it a 2024 now that it has all new technology and only the bar and the wheels are 2012? I mean, I don't know where this goes. I think the industry is going to have to work this out as we go. It's a very difficult one. And if someone has an answer to this one, I am all ears to that one.
Yep. Yeah, I would say it's even, you're exactly right on all that. It's even a step before that. Unfortunately, in Tractor Zoom's all over this, they understand the challenge, but just the fact that no one, and I think it goes back to manufacturers, in terms of the different specifications of planners, it seems like no one has a good method of doing comparables when it comes to those different configurations. So it doesn't get detailed enough. And the value, the further down you go in those codes, the expense of all of those is so high that, we really feel like we have even if it comes new, that we have the least amount of accurate comparable data, because the systems aren't picking up all of those codes. Combines are better, tractors are by far the best because there's not that complexity. But so I think it has to, we have to solve that first. That's probably easier, and that's been that way forever. But then on top of it, while you're fixing this whole puck thing, because or performance upgrade kit, sorry, John Deere term. But the whole upgrade things is that goes across the industry and more products. This is only going to get bigger. So, and I think from my understanding, it even follows a trend that has started before agriculture, and that's in construction. So if it's in construction and that's part of how they do things, it's here in agriculture to stay. So didn't answer the question other than agree, and we're all pleading. We all need it.
Well, and we're just going to have to learn some lessons the hard way and have those conversations within our own companies as we move forward. And then you're gonna have to generate your own information moving forward until there's a better system that comes along. But right now, it's just trial and error until somebody figures out a formula that works.
Yep, true.
But anyways, I know that we've gone off time and had a little bit of hiccups here, but I want to make sure that I thank the three of you just for not just the time, but the effort to just give your expertise to everybody out there. Brian, I think you're right about moving the industry forward. And on a closing note, like I said, I think we're a little bit over time, but I don't want to miss over that question that I mentioned earlier, how to become more data mature. And do you have any recommendations, the three of you, on how somebody can become a little more data mature?
I'm probably the old guy in the group here, so I'm probably not your typical guy that would get after this stuff, or you would think anyway. And I think the big thing is you have to be curious. One, you have to always want to learn new things and learn new ways to make better decisions for your company, make more money, sell more stuff, all that good stuff. You have to have leadership that's supportive, that is willing to invest in the systems, as Trent mentioned. If you don't, your neighbor will. There's no question about that. And so, you definitely have to have that support. But I think the big thing is you have to have curiosity. You can't be afraid to try, and you got to get out there and just take a look and do the best you can with what you have and build from there, because it only gets better over time. But if you're sitting on your hands and thinking, well, maybe I should, maybe I shouldn't, you never will. So just take the step. You got to get out there.
Very good.
Yeah, I would agree. I do agree 100% with that, and add on that in our businesses, it does require a person, to do that. So, so go ahead and, step out of your box, hire someone that is focused around data, has that interest, but more importantly, after you hire them, use the data. Good to know data is just, basic. It's basic data. It's not good information, et cetera. So you have to use that information there. And, again, I just come back to the philosophy, how, one person, when you look at the size of our organizations, whether it's 3 to 5 locations as what was referenced, or, 30 or 40, no matter anywhere in between, we all have hundreds of employees. We all have a lot of overheads. We all work with very thin margins. That one person, you have to look at that salary, how that one person can make an entire group better, and that's where you justify that job, and that responsibility, because that's the key. Said another way, without it, you're going to have a lot of people, maybe making some bad decisions and operate in the dark, and you definitely can't afford that. Not with our margins. We just don't have that much wiggle room.
Okay. Trent?
I agree 100% with what was just said. And really it just starts with a top-down approach, in reference to culture that values education and innovation. And as long as you have that willingness to try new things, and the understanding that not all of it's going to work, and that's okay, but we're going to keep pushing this thing forward. And then you start down that path, that's just a fairly good start there.
Good. And that's a great way to wrap it up. I know there's a few questions that are in the hopper yet that can't quite get to, but we'll use those as potential topics going forward. We'll figure out a way to get those answers out, whether it's in newsletters or posts. But for now, again, I know I've said it before, but Dwayne, Trent, Brian, appreciate